The crash that everyone's talking about right now will be worse than 2008, but not in the way almost everyone thinks it's going to happen. You see, the media has been bracing you for another crash, right? They're calling for a housing collapse, they're calling for a stock market wipeout, but that's not the real danger. This time, the bubble isn't in real estate. The bubble's not in banks. It's in a completely different sector that no one's watching. And when it pops, the crash effects will be nothing like what most people are preparing for. And here's why this is so dangerous. When the thing that everyone thinks is safe is actually the bubble, it means your savings, your retirement, and even the cash in your pocket, they're all on the firing line. Now, real quick on Mark Moss, I've invested, I've sold companies through multiple boom and bust markets. Today, I'm a partner at a leading Bitcoin venture hedge fund. And this is the same data that we're looking at to make decisions. And so I want to give it to you so you can understand why this crash is different, what the signs are that nobody sees, and how you can protect and even grow your wealth while everyone else gets blindsided. So let's go. All right, we got a lot of ground to cover today, so we're going to go really quick. Let's just jump right in. And the big takeaway is this. Most people are stuck fighting the last war, right? And in our case, that means most people are expecting a market crash like we had in 2008. That's the last war. Maybe they're looking at 2000 or whichever period that you want to look at. But those were different. Those were deflationary crashes. A housing market crash, a credit bubble crash, a stock market crash. But when these markets crashed, we saw stocks drop, right? By more than 50%. Home prices, they collapsed 30 to 50%. Banks failed, unemployment skyrocketed. That's what happened. And as painful as that was, on the other side of all that, we saw huge growth, right? Because the crash was sort of like a reset button. After the crash, if you still had cash, you could get back in, right? You could buy that home, you could buy the stocks much cheaper, and then you could ride the recovery back up. That's why a lot of people today are waiting for that. They're waiting for the same type of crash. So they've been waiting on the sidelines. They've been holding their cash. Some of these people have been holding for 2 or 3 years because mainstream media, other prominent financial channels, online, some other YouTubers, they continue to tell you that this market crash is coming. Look at the debt, they say, right? Look at the inverted yield curve. Look at all the other reasons. But here's the thing. That's not what's coming. And if you're waiting for another 2008 crash, you're going to get wiped out. Now, if you've been watching my channel for, I guess, the last couple years, you know that I broke off from the entire pack back in October of 2022. I made a video titled, "There is no market crash coming, and here's why." And then I went on to continue making more videos telling you, what the Fed did, what the bank collapse showed us. And then in August of 2023, I made a video titled that the bear market is canceled. December of 2023, I told you there would be a crash, but this time it would be different. I called it the reverse market crash because instead of deflation, we're facing an inflationary crash. That was almost 2 years ago. And here's the crazy part. The market since then has played out exactly as I said it would. I mean, look at this. Since I made that call in December of 2023, Bitcoin's up 186%. Gold, which so many wrote off as dead money, has surged almost 95%. Even the NASDAQ and the S&P have moved higher, up 52% and 46%. But notice what's lagging. The broader market indexes, like the Russell 2000, right? It's barely up 30%. So if you'd been sitting in cash on the sidelines waiting for another 2008 style crash, or if you'd followed maybe Ray Dalio's all-weather portfolio, which is the classic Wall Street playbook, you'd be way behind right now. Look at the numbers. A simple equal weight allocation in the top 4 assets, Bitcoin, gold, NASDAQ, and the S&P, would have turned a $100,000 portfolio into nearly $194,000 by October of 2025. Meanwhile, Ray Dalio, the all-weather strategy, would have grown to about $118,000. That's a difference of $76,000 in just 2 years. That's a 64% outperformance just by positioning for the reverse market crash that I called back in 2023 instead of clinging to the old playbook. So while everyone else was waiting in cash or trusting their safe conventional strategies, the people who followed this thesis were building wealth at nearly double the pace. Now, this is the power of understanding the crash that we're actually in, right? Not the one everyone thinks is coming. And if you've been feeling like you can't afford the same lifestyle that you had a few years ago, congratulations. You're already living through the early stages of this reverse market crash. Okay, so now the big question is, if this isn't like 2008, where is the real bubble today? Because remember, every crash starts with a bubble somewhere. Okay, well, if the bubble's not in housing and it's not in the stock market, where is it? Well, the real bubble, it's hiding in plain sight, right? It's in the one place that everyone thinks is safe. It's government bonds and in the dollar itself. Now think about it. The U.S. Treasury are supposed to be the safest asset in the world. The dollar, it's the foundation of global trade. But today, both are being inflated by trillions of dollars in new debt and endless central bank printing. The U.S. government is borrowing over $2 trillion a year just to stay afloat. And the only buyers that are left are the Fed and passive flows that are forced into treasuries by regulation. Now, there's a recent report that came out by Mir McCann Research, and they put it bluntly. They said, quote, "The current bubble is not like 2008, which was a credit bubble. It's a currency and treasury bond bubble. And when the foundation of the entire financial system is the bubble, then everything built on top of it, stocks, pensions, real estate, even the paycheck, becomes unstable." End quote. This is why I'm saying this crash is going to be worse than 2008, because when housing collapsed, at least the money was still good. But when money itself becomes the bubble, there's no safety net. Okay, so how do we see that the bubble's in money and not in stocks, not in real estate? Well, the clues are everywhere. There are the signals, there's the symptoms of capital fleeing fiat. And when you see them, the market begins to make a lot more sense. All right. So just look at the stock market. Specifically, let's look at the Mag 7. These tech giants have become so dominant, they now represent roughly 34% of the S&P 500's market cap as of August of 2025. In 2024, companies like Nvidia, Meta, Amazon, Apple, Microsoft, Tesla, Alphabet, all of those, they drove more than half of the S&P 500's gains. For instance, last year in 2024, Nvidia returned 171%, Meta 85%, Tesla 62%, Amazon, Alphabet, Apple all posted double-digit gains. These are massive returns, right? But these aren't bubbles in those stocks. They're just the places capital is going away from the cash. Now, these companies, they feel safer, right, than holding dollars. So people pour money into them as sort of like this pseudo safe haven, right? Then you can look at like other areas like the crypto NFT market, especially like crypto punks, right? People are spending serious money on digital avatars. Like what? Why? Well, the reason is because when the underlying currency feels unsafe, then you're willing to just basically leap into anything that gives some sense of scarcity and value outside of fiat. And then, of course, there's Bitcoin and gold, right? The main beneficiaries of capital flight right now today. We just looked at how Bitcoin's up 185%, right? That's since December of 2023. Gold's up 95%. Now, the fact that these digital and metallic safe havens have outperformed the bulk of traditional assets isn't an accident, right? On-chain flows confirm this. The massive inflows into Bitcoin are often predictive of future returns. That means that people are quietly moving capital into crypto because they see through the illusion that cash is safe. So what looks irrational, like NFTs and tech stock mania, crypto bubbles, it's actually kind of rational when you understand the context. These are safe haven bids. They're not speculative bets. If you view them through the traditional lens, you call them bubbles. But once you flip the lens, you see that money is the thing crumbling, then it all starts making sense. Now, in another video I'm going to go deeper, and I'm going to show you a chart from Weimar Republic, Germany during hyperinflation, when gold looked volatile. But the real story was the currency was collapsing underneath it. And of course, once you see that, you'll never view volatility the same way again. Okay, so now you understand why this next crash, it's different, right? Here's why I say it's going to be worse than 2008. Because in 2008, when the bubble and housing and credit, when all that collapsed, as painful as it was, as devastating as it was, you guys have heard my story in 2008. I was in real estate. I got wiped out. It was also a reset, right? Homes got cheaper. Stocks went on sale. And eventually those new buyers could step in. The next generation had a chance to get back in, right? And as much as it hurt, at least there was an opportunity on the other side. But today, with the bubble not being in housing or credit, but instead money itself, when the dollar and the treasury bonds are the bubble, there's no reset button, right? There's no better chance to get in later. There's no reset. I mean, think about what that means. That means if you're waiting in cash for another, 2008 style collapse, you're not going to get it. Instead of asset prices falling to meet you, they're just going to keep running away. Housing doesn't get cheaper, it gets permanently out of reach. Your savings don't become more valuable, they get inflated into nothing. Retirees on fixed income get crushed, young families get locked out of the market, and the middle class, they get hollowed out. That's why this time's worse. In 2008, at least you got another chance. This time, there's no second chance, unless you already own the right assets before the systems crack. Okay, now, I know this sounds bad, and it is, but it doesn't have to be for you. It doesn't have to be for you and I. What are we going to do about this? How do you not just survive this reverse market crash, but actually come out wealthier than ever before? Well, the winners in this kind of crash are the people who front run the collapse, right? They own the scarce assets that can't be printed away. Assets like Bitcoin, right? Digital scarcity that governments can't print. Gold, it's the oldest form of hard money. Prime real estate, collectibles, businesses with real cash flow that can rise with inflation. Meanwhile, the losers, they're the ones sitting in cash. They're the ones hiding in government bonds. They're the ones that are thinking that they're playing it safe. Or maybe they're in some other types of diversified assets that won't keep up with the rate of money printing, monetary debasement, or what I call the real rate of inflation. But for us, because we see this coming, we don't have to get wiped out. We don't have to see the quality of our life decline. In fact, you can use it as a once-in-a-generation chance to multiply your wealth while everyone else is blindsided. And if you want to see exactly how the entire financial system is being rebuilt right in front of our eyes, you should probably go watch this video right here, and I'll see you over there.